Welcome back to Investing Talk podcast. Today we're doing a focused exploration of American Resources Corporation, ticker AREC. You sent over a bunch of info, recent developments, analyst views, and, well, our job is to unpack it, right? Highlight the key stuff so you know what's going on. We've got notes on investor events, financials, industry context, lots to cover. Okay, let's get into what stands out.
Okay, yeah, there's quite a bit here. What jumps out first, for me anyway, is how active they've been with investors. Their participation in that virtual investor closing bell series back on March 24th, that's pretty significant.
Right.
The CEO was talking up ReElement's work on rare earth production, especially their heavy rare earth refining.
Heavy rare earths. So those are the trickier ones, aren't they?
They often are, yeah. More challenging, more expensive sometimes than the light ones. So focusing there is definitely noteworthy.
And he linked it, I saw, directly to recent executive orders on critical minerals.
Exactly. It seems like they're really trying to position themselves, to ride that wave of government interest.
Makes sense. They also mentioned participating in a 2025 mining conference, but the details were a bit thin on that one.
Still, these kinds of appearances, they're just vital for a company like this. Visibility, investor interest, it all helps. But maybe the bigger story, the really compelling development, is unveiling this mobile, modular, rare earth leaching solution.
Okay. Yeah, that caught my eye too, a transportable unit to get valuable stuff out of coal and mine waste.
Precisely. And the plan isn't just to use it on their own properties. They're talking about licensing it globally.
This mobile modular thing, it sounds potentially big. What's so interesting about that approach right now?
Well, think about flexibility and cost efficiency, potentially. Traditional mining, processing. That takes huge upfront capital, right?
Yeah.
And you're stuck in one place.
Right, massive fixed infrastructure.
But a mobile system could mean lower startup costs. It could let them process materials from different spots, maybe even, existing waste piles, which also helps on the environmental side.
Ah, okay. So it's not just mobility, it's tapping into waste, turning liabilities into assets.
That's the potential game changer, I think. It really shifts the economics compared to digging a brand new hole in the ground.
Okay, let's shift gears a bit. Market performance expectations. Some of these projections for American Resources are really something. Profitable this year, estimated $3.01 in earnings after a loss last year. That's quite a turnaround.
It is. And analysts are looking at, 123% year-on-year increase to hit that number?
That kind of growth forecast.
Yeah.
You have to ask, what's driving it? What are the factors behind such high hopes?
Well, tying it back to what we just discussed, it likely comes down to betting on that leaching technology. If they can successfully roll it out, maybe license it, and combine that with the rising demand for rare earths, you can see how the optimism builds. The CEO talking about expanded production suggests they expect a big jump in output.
Makes sense. And even though we don't have super recent trading volume figures or detailed analyst reports in front of us, these kinds of announcements showing up at investor events, that must shape how people see the company, right?
Oh, absolutely. These events are crucial platforms. Lets the company tell its story, show off the tech, build confidence. A good presentation can definitely spark interest, maybe even boost the valuation.
Okay, let's widen the lens. The industry context. Critical minerals, rare earths. Obviously hot topics with electrification, infrastructure needs. American Resources focusing on a domestic supply chain feels very timely. What's the bigger picture significance there, especially with, global tensions?
It's hugely significant. Supply chain security, that's the key phrase. Right now, so many critical minerals come from just a handful of countries. Building domestic capacity reduces reliance on sources that might be unstable or, frankly, adversarial. Governments, industries. They see this as strategically vital now.
And it's a competitive space. Our info doesn't detail every competitor move, but the focus seems to be on innovation, partnerships. So how does AREC's mobile leaching idea potentially give them an edge? We saw mentions of MP materials, Piedmont Lithium. How do they fit in? How is AREC different?
That's a good question. MP Materials, for instance, they run a huge integrated mine and processing facility.
Yeah.
Very large scale.
Right, the traditional model, scaled up.
And Piedmont Lithium, they're focused mainly on developing lithium resources, again, more traditional mining. AREC's approach, this mobile modular thing targeting waste streams, it's just a different path. Potentially more agile, maybe greener. It could let them tap resources others can't economically touch.
Could that mobile approach offer a speed or scalability advantage compared to MP's fixed site or Piedmont's development timelines?
Potentially. Yeah. Setting up massive infrastructure takes time and money. Deploying modular units could be faster, maybe more scalable in increments, but that depends heavily on execution and manufacturing the units themselves.
Okay, now, the financials. This is where things get really dramatic. Revenue was, what, almost $17 million in 2023, then an estimated drop to under $3 million last year, down 82%. But then projected to jump to nearly $98 million this year.
Yeah.
And over $250 million by 2026. That's a wild swing.
It's astronomical, isn't it? That kind of V-shaped recovery, or maybe more like a hockey stick projection. It almost has to be banking entirely on that mobile leaching tech hitting big. Commercialization, licensing deals, deployment, it all needs to fire on all cylinders.
And the earnings per share numbers tell a similar story. Negative recently, projected positive this year, then a big jump next year. What needs to click for that EPS turnaround to actually happen?
Well, first, the revenue has to show up, obviously. That massive growth needs to materialize. And second, they've got to manage the costs of deploying and running this new tech efficiently. You could have great revenue, but if costs run away from you.
So yeah, hit the revenue targets, control the costs. That's the recipe. The forward PE for this year, around 38. That feels pretty high, especially compared to typical energy sector multiples of, say, 10 to 15.
It is high, no question.
What does that tell us about how the market feels about ARC?
It tells us the market has baked in huge growth expectations. Investors are clearly betting heavily on future success, on that technology potential. It definitely signals a speculative element. The current price reflects future hope more than current reality.
Now, this negative equity situation, accumulated losses mean liabilities exceed assets, makes debt to equity kind of meaningless. Net tangible assets projected negative this year, too. What are the implications of being in the red like that?
It's serious. Negative equity makes borrowing harder, raises questions about long-term solvency if that turnaround doesn't happen.
What's the usual path out of that? What should investors watch for? They absolutely need sustained, significant profits to rebuild that equity base. Simple as that. So investors need to track revenue growth, sure, but also profitability, cost control, positive cash flow generation. And any successful fundraising efforts selling more stock maybe could help shore up the balance sheet, but that dilutes existing shareholders. It's a balancing act.
Okay. And free cash flow. We don't have exact numbers, but operating cash flow was negative recently, and they'll surely need to reinvest heavily to hit those growth targets, right?
Oh, absolutely critical. Reinvestment is key. They need to build or buy these mobile units, deploy them, maybe scale up refining. If they generate positive cash flow, putting it back into the business effectively is crucial. Without that, those growth numbers stay purely theoretical.
And return on equity.
Yeah.
Deeply negative recently, projected to improve slightly, but still negative this year. Way below peers. Yeah, that negative ROE just hammers home the point. They haven't been generating profit relative to shareholder equity. Even the projected improvement still shows there's a long way to go on profitability and efficiency. It highlights the past struggles and just how vital this projected turnaround is.
Okay, let's talk strengths and weaknesses from the sources. Strength, that innovative refining tech using waste, seen as cost-effective, environmentally friendly. How big a deal is that environmental angle becoming for investors here?
It's becoming huge. ESG, environmental, social, governance factors are increasingly important. A technology that promises a greener way to get critical minerals, that could be a major plus. Better access to capital, maybe even a valuation premium down the line.
And partnerships, especially with ReElement Technologies, mentioned as a strength. What's ReElement's focus? How does that help AREC?
ReElement is specifically into processing rare earths and battery metals from unconventional sources, like that coal waste. So the partnership gives AREC specialized processing know-how, maybe access to infrastructure. It strengthens their whole value chain proposition.
Okay, weaknesses or risks. Dependence on mining waste availability, volatility in the critical minerals market. Those stand out. How could changes in rules about waste, or just finding enough of it, impact things?
Well, tighter environmental rules could, paradoxically, make accessing that waste harder or more expensive, or maybe even reduce how much is available. And the minerals market itself, prices swing based on global demand, geopolitical stuff, new tech replacing one mineral with another. That volatility is just part of the game in this sector.
Right. So looking ahead, catalysts and risks. Catalysts seem to be continued progress on the mobile leaching tech, upcoming earnings reports. What specifically should people watch for there?
With the tech, Look for operational updates. Are the units working? How much are they processing? What are the recovery rates? Are they signing licensing deals? That's the proof. Earnings reports. Well, that's where the rubber meets the road. Is that huge projected revenue actually starting to show up? Are costs under control?
And the risks we mentioned, stricter environmental rules, global economic conditions hitting demand. How vulnerable is AREC?
Like any company in this space, they're exposed. Rule changes could hit their raw material supply or costs. An economic slowdown could dampen demand for EVs, wind turbines, anything using these minerals. That would ripple back to AREC's potential revenue.
Okay, so let's try and pull this all together. Stepping back, you've painted a picture of American Resources Corporation at a really interesting, maybe pivotal moment. You've got these huge growth projections driven by what sounds like genuinely innovative tech in a sector, critical minerals, that has strong momentum.
Strong tailwinds, innovative approach, that's the bull case.
But the financial history is choppy, volatile, and that current valuation, that high PE, it clearly reflects very high expectations and, well, significant risks too.
Definitely. The market is pricing in a lot of future success already.
It really feels like the development and, crucially, the successful deployment and commercialization of that mobile leaching tech is absolutely central to their whole story.
It seems to be the linchpin, yes. Everything hinges on executing that strategy.
So yeah, keep a very close eye on progress there and on those upcoming financial reports for the real numbers. It's complex, there's undeniable potential here, but also pretty clear risks that need careful weighing.
It's definitely not a straightforward picture. Requires diligence.
Absolutely. We strongly encourage everyone listening to do their own further research, dig into those financials, understand the critical minerals market dynamics before making any investment decisions. And hey, if you found this exploration useful, please do subscribe, like the video, and leave us a comment. We appreciate the feedback.